And we are live, bang on time once again. Welcome, everyone. Welcome to Coin Bureau Clips. Thank you for tuning in to NFA Live, which has been renamed NPC Live for this week. Anyone who didn't see the tweet, don't worry about it. It's not worth it. So I am joined as ever by the wonderful Mr. Rob Wolf from Digital Asset News. Welcome, Rob.
Welcome. Thank you for having me. And Guy, every time I think I'm going to do a promo, I'm like, I'm going to do a promo better than you, better than Guy. And I see that, I'm like, I'm not even going to try. So if you've seen the Twitter feed, just follow Guy and you'll know what we're talking about. I don't want to explain it to you. Just watch it, and if you get it, you get it.
Yeah, I think it's one of those things. If you try to explain, your head might explode. But yes, thank you for those kind words, Rob. If you want, if you want to get on that game, you just got to get a wig on. That's usually a good starting point. And of course, I'm also joined by the wonderful Mr. Ben Cowan from Into the Cryptoverse as well. Hello, Ben.
Hey, how's it going? Thanks for having us here.
Good to see you guys. So last week we kind of had a rare bit of breaking news during the stream with the arrest of Alex Maszynski, and thanks to Rob, of course, we also had the wonderful Simon Dixon on. It was the stars really aligned there, didn't we? Because it was so good to have Simon on, especially at a time like that, to talk about everything going on with Maszynski and obviously the ongoing mess that is Celsius.
Oh, yeah.
However, rather selfishly, I thought the SEC, the judge in the SEC versus Ripple case, waited until well after we'd finished the stream to announce her ruling in that case. I was very disappointed that I really would have expected her to do that live on air for us, but there we are. So, which obviously leads me very neatly to the first thing I think we need to talk about today. I just want to get both of your gentlemen's case and thoughts on that ruling in the Ripple case. What does it mean? Does it change much? Where might we go from here? Lots to talk about there. But Rob, do you want to kick us off with your thoughts on Ripple?
Yeah, I like this because imagine what could have been if we would have been on live when Alex Maszynski got arrested and the SEC case gets essentially lost by Ripple. That'd have been all-time highs. But I had an interview with Simon afterwards, and we talked more about Alex Maszynski and Celsius. I didn't even do a video on Ripple because everybody else was doing it, and I was like, I don't really want to touch this. And then within like 24 hours, when I put out the next video, there was a lot of things to kind of go through because in the beginning, everybody gets so excited because they hear Ripple won. Of course, that's what we hear on crypto Twitter, right? And all the different into the cryptoverse places. And then of course, in mainstream media, it's totally different. They're like, no, the SEC won because the judge came out and said that because of the hedge funds and those institutions, they knew what a contract or a securitized contract was. They knew where they were buying. Actually, Ripple lost. And I was like, am I in like a parallel universe? So I just took a couple of days and waited. And I've watched a couple of different videos. Guy, you had a great one on the main channel, but I just I'm not a lawyer. And when I took a look at this and I said, this is what I get from Hogan and John Deaton, John Deaton. And they put it out very simple like this. Like they said, look, on the actual case, I'm going to read this. It's XRP. This is Judge Torres' ruling. It's documented, and I retweeted it. XRP as a digital token is not in and of itself a contract, transaction, or scheme that embodies the Howey requirement of an investment contract. Rather, the court examines the totality of circumstances surrounding defendants' different transactions and schemes involving the sale and distribution of XRP. So really what it came down to this, and John, he put it out very simply. He's like, if you don't know where it's coming from, there's no contract. So for exchanges, if you're buying it on exchanges, you don't know where it's coming from. It could be coming from Rob. It could be coming from Ben as he dumps all his bags of XRP finally, or whoever it is. And then they buy it up. You don't know where it is. But for the hedge funds and the institutions, they knew where it was coming from. And on that case, there will be another case coming about in, who knows, 12 to 18 months. But for right now, as it stands, XRP is not a security. The thing that is interesting to me is just how, well, there's two things, just how staunch Gary Gensler is about saying that, well, we won this part, of course you want to do that, but just how like he's saying, well, we're going to look at that ruling, and we're going to talk about appeals, and we're going through the process. But it was like they could not give an inch on anything. And when I take a look at that, I'm like, that's a guy right there that hates to lose. And I think it's going to go through another court case, and they're going to appeal it. And even John Deaton and Hogan said the same thing. So we'll see where it goes, but it's looking pretty good for Ripple. And of course, the crypto market at large.
Yeah. I think there's so much to chew over there, isn't there, with the whole case and with the ruling and kind of XRP's new status. But I wanted to get your thoughts, Ben, in particular. What do you think? I mean, does this really mean anything much for other altcoins beside XRP, or is it really just XRP that's the winner here, as far as you can see?
Well, I mean, remember, there were already altcoins popping off even before the ruling came out. And some of the older altcoins that didn't do as much in the last bull run, like we saw, and we talked about this, I think, in previous videos, like Litecoin was doing pretty well this first half of the year. Bitcoin Cash went up a lot, a few weeks ago as well. So it's not to say that, the other alts will only do well because of this ruling. I see. My view has always been, by the way, there's an echo, I think, probably coming from Rob's. But my view has always been that whether they're securities or not, to me, is somewhat irrelevant, right? Like that's always been my view, because I buy securities all the time, through my broker, right? If I want to go buy an equity, if I want to go buy a stock, like I can easily do that. What was more concerning to me was just the lack of clarity, and it's whether the securities or not, to me, is not a big deal. It's just tell us what they are, so that we can actually make investment decisions based on what the laws actually say these things are. It's kind of like back in 2020, I actually bought some XRP, and that was why I commented to Rob in a tweet, I think, saying, "Oh, I can finally sell my bag," because I bought some at like 30 cents or something way back in 2020, and then the SEC came out and said that they're suing Ripple, and then it got delisted from a lot of the American exchanges. So to me, I would say it is probably long-term bullish for the altcoin market. I mean, the short term, it's tough to say. I mean, certainly some altcoins have done well in the last over the last week or so, but my view is that it's long-term bullish for the altcoin market. I know people don't hear me say many positive things about the altcoin market, at least over the last year and a half or so. But I'll remind people, I do think the cryptoverse is much more than Bitcoin. I think there's a lot more, room for other cryptocurrencies as well. It's just that for the last year and a half, and I still think it could go on a little bit longer, as liquidity, it's more so a function of liquidity, right? In crypto, as liquidity is sucked up, altcoins tend to get hit the hardest over, say, Bitcoin and Ethereum. But I would say, look, long-term bullish for altcoins. I still think we have the short-term issues of, liquidity is moving out, and there is still the Federal Reserve continuing to tighten, but long-term, it's probably a good thing.
Yeah, I agree with you, Ben. I think this is definitely a win for crypto. However, sort of other parts of the media may try and present it, but there's no getting away, I think, from the fact that it was a partial win for the SEC as well. And I guess crucially, what this leaves me kind of wondering is where all of this leaves Ripple, the company, and obviously XRP, the currency as well, because here we are. That Ripple, I think it's, as you said, Rob. I think we're still going to see. We're probably going to see an appeal. This seems likely to go to trial. So there is still the question of these institutional sales of XRP, which is something in the region of $700 million worth, I think. So that's a potential amount that Ripple could, in theory, be on the hook for. So I'm curious to see where the company itself goes from here and where XRP goes as well. Obviously, XRP now has the benefit of being officially not a security, which is obviously extremely bullish for it. One thing that did kind of catch my eye talking about other altcoins was that one of the few alts that's actually outperformed XRP recently is XLM. Which is obviously Stellar's native coin. Stellar being a kind of rival project to Ripple, founded by Jed McCaleb, who's now joined the ranks of space exploring billionaires. So, did you see that? I think the proceeds of his Ripple sales, he has actually founded a space exploration company.
Yeah, I don't know, but
seems to be what you do.
But out of all of us, that guy's probably the best investor so far, or as it looks like on the balance sheet. That guy sold billions of dollars worth of XRP and just dumped on the XRP community forever. And now, of course, he's reaping the rewards. But that's not to say that, Brad Garlinghouse and Larson didn't do the same thing. They did sell, and that is within their rights, but it was a lot. So I got to tell you, tip of the hat for that guy for dumping everything on the community. Not the greatest look, but there we go.
Yeah. And he gave us Mt. Gox as well, although, to be fair to him, I don't think he was the one. So he certainly wasn't at the helm when Mt. Gox went belly up. So maybe we should cut him some slack on that. But he's certainly one of the more influential figures in crypto, I think it's fair to say, even though he seems now to have kind of faded into the background. You don't tend to hear very much from him these days. Maybe he'll start tweeting. Maybe he'll go all Elon and start tweeting about rockets and going to Mars and all that sort of stuff. So it could be all to come from Jed.
No, man, this is the guys behind the scenes that you do not see on social media are the ones that pretty much push the markets. And that's what I've learned, like living in Puerto Rico and meeting these like crypto OGs. I mean, they're doing these things behind it that people just will never know. And I think Jeb's one of those. And that's just why, like, you can't time the market.
Absolutely. Very wise words. Okay, we're going to move on. But before we do, can I just ask people if you have any questions for Ben, Rob, and myself? We're going to try and we've got a few more things to talk about, and then we'll try and do some questions at the end. So yeah, if you could put them in the comments, and I will try and pick out some of the most insightful and some of the silliest towards the end, and we'll try and do a few minutes answering them. But let's move on to the next thing I wanted to talk about. Why is BTC stuck around 30K? I mean, that chart is just really, really flat. And even with the kind of little mini explosion that we got with XRP, obviously XRP and alts were the big winners there. BTC's chart, it just sort of pops up to 31K ever so briefly and then pops right back down again. So, gents, my question to you is, and I'll start with you, Ben. Why do you think we're stuck around this mark? Is it a crypto related thing? Is it macro? Is it both? What are you seeing?
Yeah, I think I would say it's most likely a macro related thing. I'm actually, I don't know if you can see my screen there, but so basically we saw something similar play out in 2019 as well. And this is what I was, I previously talked about a lot, on these streams and on my channel, is that in we call them the pre-halving years, right? Because we care a lot about Bitcoin. Most people know them as the pre-election years, right? And in pre-election years, the S&P typically climbs the wall of worry for a lot of it. Again, when we talked about this before, right? Is the S&P will climb the wall of worry until it has sufficient reason not to do so. And the two main reasons that I think that it would not climb the wall of worry would be either the reacceleration of inflation, which we haven't gotten yet, or the labor market finally softens up. So until one of those two things happen, the S&P can climb the wall of worry, or if there's a major geopolitical event, but we can't plan for that. So again, the S&P loves climbing the wall of worry in the pre-election years. What's interesting is we actually saw a very similar move. Like, I mean, look over here in 2019. So The orange line is the S&P 500, and then the sort of these candles that you can see, that's Bitcoin. So what's interesting is that the S&P basically went up for the entirety of the pre-election year back in 2019. But we also see that Bitcoin kind of went up for part of it, but then it sort of stalled out, right? It got stuck at the station while equities continue to go up. And one of the reasons I think that happens is because I think crypto is more dependent on liquidity than say the stock market, right? So the stock market, of course, cares about earnings, that they care about a lot of other things that crypto projects don't really have. I mean, again, I've talked before, like, what do we imagine if altcoins had an earnings call? Hey guys, we only got hacked 3 times this month or this quarter, but our community is still really strong. So go team, go. I think that crypto is more so a function of liquidity. So like if you look over here in 2019, maybe you can kind of see this. So this is net liquidity. This is basically just adding up all the central, or at least a significant portion of the central banks, China, Japan, the United Kingdom, the United States, Australia, New Zealand, the ECB, and the UK. And what you'll see over here, right, is that like liquidity in 2019 wasn't really going anywhere. And when it doesn't go anywhere, crypto can stall out at the station, right? Like it doesn't mean it can't go up. I mean, we saw Bitcoin go up in 2019, even though liquidity is going down. We saw Bitcoin go up in 2023, even though liquidity has been trending down here since January. So we've seen this before, right? We've seen crypto do well in the pre-halving year. We've seen equities do well in the pre-election year. I think the difference is that the crypto market is more dependent on liquidity than the equity market is. And so like if you were to look at say the altcoin market, and if we overlay, right, if we were just to overlay net liquidity onto the altcoin market, I mean, it's been a pretty good fit for a long time. Now it doesn't mean it doesn't occasionally diverge, right? I mean, I'm sure that it would. We also know that the S&P diverges from net liquidity. I mean, look at this divergence here by the S&P on net liquidity. One time it used to track it quite closely, but again, we saw the same type of divergence in the pre-election year of 2019, and they didn't reconnect, and also in 2018, right? And they did not reconnect here until early 2020. So the general thing here, I think that we have to that we have to think about is like I think that crypto is more dependent on liquidity. Equities are dependent on liquidity, but also there's a lot of like just passive investors, and a lot more passive investors in equities than there are in crypto, right? Like 401ks and people that just sort of buy stocks no matter what. So I think that's really the reason. I think it comes down to liquidity, and for equities it comes down to a lot more than that. And so that's why crypto has kind of stalled here. And it's not to say that crypto can't go higher. I mean, we're as you just showed, right? There's plenty of altcoins that have popped off recently. I mean, XRP is one of them, XLM. There's definitely altcoins that have popped off recently, but again, the market as a whole is still somewhat struggling. I think just because liquidity hasn't been going in a favorable direction.
Yeah, Rob, do you agree with that? Is it mostly liquidity? Do you think?
I mean, it could be. We just saw. I mean, Ben makes a pretty compelling case. Let's be honest. With liquidity, S&P 500. Even if you take a look at the total market cap and just overlay that with total liquidity, M2 or world money supply, you can see that it's just kind of once the money printers go on, everybody gets happy and they start to buy, and that's pretty much what it is. And then once we start to go down, then it kind of happens like that's just the same thing, which is what we're doing now, where we're going sideways. But I mean, if we take a look at like the macro, there was. Let me share my screen. If I can do this right. This is going to look kind of weird for a second. There. So like, I mean, if you take a look at macro, I mean, there was an article that just talked about how Americans themselves are not paying off their credit card debts, probably for a variety of reasons. They're not keeping up with real wages. I mean, there was a piece here about how the real wages are really pretty much been stuck for the last 60 years or something like that. And that's in dollars in 2018. If you want to take a look at dollars in 1982 to $84, you can see that the U.S. real average hourly earnings have been pretty much stagnant and flat. It wasn't until the money printers went on that we had a big boost in markets. Now, also, and Ben, I think Ben's talked about this ad nauseum, the yield curve. I mean, we can see that like just people getting into the market. Like if you have a ton of money, why wouldn't you just put it into a 3-month or a 6-month at 5.49 or 5.5? To me, it just seems like a no-brainer if you want to. Of course, you're not keeping up with inflation, but that's just how it is. And then, like Ben was talking about recessions. There's this website that I use all the time, and you can figure out what it is. But you can just see, like when we're talking about Treasury yield spreads, like when these things go negative. And I think this is what people are waiting for. And Ben had a discussion with Darius Dale just a couple of days ago, which I'll highly recommend if you want to talk macro and how that relates to equities and crypto markets. But I mean, the thesis for Darius was we're expecting a recession coming in Q4 or Q1 of 2024. And you can just see here, like the Treasury yield spread, once it goes negative, it's not too much time, 8 to 10 months, where we hit a recession. It's happened back in the 70s. It happened back in 1990s. It happened in 2000, 2001. It happened again in 07. And look, we went negative here, had a little recession, and we just went negative, November 2022. So we're coming up on that time frame. So I think when people are talking about this, let me just get rid of this for a bit. Sorry. I think there's some people that are really looking into this and saying, you know what, maybe I don't want to put a ton of money into that. And then maybe, in the crypto market, we're still waiting for that ETF to get approved, and we'll see. And we're still waiting for clarity. So there's a lot of things up in the air, and I can see one of those things happening.
Yeah, but we do seem to be in an uncertain period for crypto, don't we? We get a bit of good news like the SEC news just last week. There was obviously, as you mentioned, Rob, the ETF applications, which everyone kind of seems to be. I get the sense we're in this wait and see period. Everyone's just like, well, let's see what happens with this ETF then. And there's also plenty of uncertainty, isn't there, around the crypto space in particular. I guess there are still kind of clouds hanging over DCG. There's been questions around Binance. There's uncertainty over regulations. There's NASDAQ, I remember, recently said it won't be providing crypto custody. It kind of did a 180 on that. Again, I think that was due to regulatory uncertainty. And yeah, I guess when you couple that with this sort of uncertain economic outlook in general that you were talking about, Robin, on the one hand, everyone seems to be expecting this recession, which I think is still very likely. On the other hand, inflation is coming down. The labor market is apparently really, really strong over there in the States. So we're getting these really conflicting signs, aren't we? Conflicting signals from crypto and elsewhere. One thing I wanted to put to both of you was, does this kind of confirm what you were talking about just a few weeks ago, Rob? Did people basically sell in May and go away?
I don't know, but man, I got to tell you, sometimes when I look at that, I'm like, it's funny because like when you look at that, you're like, man, maybe I should have done that. Because my thesis was, like usually that works, but not every single year. And this is, to me, in our 4-year cycle for crypto, this is the reaccumulation year. Me and Ben differ on this. I'm buying altcoins. You guys are not. But I just think over the long haul, it'll do pretty well. So the sell in May and go away, I don't know. But it seems like, you know what? I will say this. September, historically speaking, is the worst month on average for the traditional markets and for crypto. September is an awful month. I think out of the last 13 years, I think it's been in the red 9. So we'll see how that plays out. If that's the case, then we know where we're going. And I don't know if that's what happened, but some days I wish I would have done it. But then of course, then there's like these white swans that come out, if you want to call it that. Mashinsky getting arrested or Ripple winning the case. That's huge for the market. So you never know in the markets, and I can't time it. So yeah, I just kind of plod along.
Just to say, I know, Rob, you've been buying altcoins, and I mean, it's like, weeks like this where you benefit from that, right? Where they're up. Some of them are up. It depends on if you got the right ones, right? But some of them are up a lot. Some of them are just putting in new lows. But I mean, I think for me, the reason that I just focus more on Bitcoin. Like, I mean, the only cryptocurrency I've bought in like a year and a half is Bitcoin, and I struggle to, you know, when I look at their Bitcoin pairs, they just look like lower highs and lower lows for most of them, not all of them. But yeah, I mean, I think it's a tricky thing with the altcoin market because you really just don't know which ones are actually going to survive and which ones are not. And again, there's going to be some survivorship bias, right? Like, so in a couple of years, when hopefully the altcoin market is in a real alt season, you know, and you know, maybe Bitcoin's at new all-time highs and the altcoin market's going crazy, you'll be able to look back and say, well, you know, if I had bought that altcoin in July of 2023, I would be rich, right? But there's also going to be some survivorship bias there because people are only going to look at the ones in 2025. They're only going to look at the ones that actually survived. There's going to be a lot that don't survive and then just go to zero, basically. So it's really hard knowing which ones those are going to be.
Exactly. And no one's gonna remember EOS, you know, from back in the day, like, oh, I bought a ton of EOS. Well, good job for you back in 2017. And then, but I will say this, like, I mean, I'm buying alts, but if I would have listened to Ben in 2022, I would have been in a much better position. But here we are. So this is the only market, I think, where we're talking about like, well, this is not financial advice. It's just for me. We talk about this like, well, shoot, I'm only up 200%. That sucks, you know, as opposed to like, maybe I get a 500% or 1500%. This is, you know, no one's talking about that in the S&P 500. So I think we're all going to be fine. It's just depending on which projects we choose. And this is the right market to be in for me.
Yeah. Amen. Amen. Okay. Let's move on. I want to talk a little bit about some of these. Well, we've seen some kind of whale wallet movements recently. There was the US government moved a lot of Bitcoin recently, looking to sell that possibly. There's been a lot of ETH on the move as well. 60K, more than 60K ETH was recently moved to Kraken. We've also seen some of these kind of dormant ICO wallets wake up recently, ETH ICO wallets, among others. So my question is, how vulnerable do you guys think the market is to whale sell-offs like this? Because, I mean, I guess you'd assume that it's sort of mature enough by now, all these years in, to withstand large sell-offs. But you know, there still do seem to be these kind of panics that people get into whenever the Mount Gox Bitcoins get mentioned. You know, a kind of shudder seems to go through the market. So, and you know, if the market can't withstand these sales, what's the kind of what sort of amounts are we talking about that could impact the price of say BTC or ETH? Ben, do you want to run with this one?
Yeah, I mean, honestly, this just goes back to the liquidity discussion we had, right? Like Bitcoin and Ethereum, which I consider to be blue chips, right? So when I say altcoins, I'm not talking about ETH. I don't really consider ETH an alt. I think of it as a blue chip. I mean, and I think its history speaks for itself because alts bleed against Bitcoin. They also bleed against Ethereum is the reality. So I think that assets like Bitcoin and Ethereum can more easily absorb that sort of stuff. So, like, I mean, you know, the U.S. government didn't they sell like 10,000 Bitcoin just a few months ago? The market had like a wick down and then it just kept on going, you know, like it just kept on going. And the reason is because we're in a risk on environment. You know, when we're on risk on, you know, the market can absorb that sort of stuff. And I mean, even in a risk off environment, while I think the market can absorb it, I mean, if people in general are selling, the market can keep putting in lower lows and lower highs. So I would say, so for the blue chips, I don't really think it's that big of a deal. I think that there is a lot of liquidity that can absorb that sort of stuff. But that's where when you get to the altcoin market, there's not as much liquidity, right? So there's not that huge group of people that just DCA every single altcoin every single week, like maybe they do Bitcoin or like maybe they do ETH. So it's all about that, that liquidity. So I think that the market I think it is mature enough to withstand large sell-offs. Especially if it's just like a single, if it's like 10,000 Bitcoin, I think the market is mature enough to absorb that. But that's also as you go further up the further down the risk or further up the risk curve, the lesser or the lower liquid assets they get hit harder. And I mean, there's while there's not someone that's going around probably with the equivalent of 10,000 Bitcoin for all these different altcoins, right? I mean, even if they were going around with say like a tenth of that, and if they were to sell it on the open market, it could absolutely crush that altcoin. So yeah, I think the market is fairly mature now. I mean, we even got a glimpse of that just a few months ago when the U.S. government sold 10,000 Bitcoin. And I mean, think about how many times every single year we get some type of notification that there's an address that has moved, like where some Bitcoin is moved or some ETH is moved. And I mean, as far as I remember, we've never gone and looked at this and then like the next week everything was down like 30%. It tends to just be not really mean a whole lot. And also just because they send it to an exchange doesn't mean they're selling it right away. There could be all sorts of reasons they send it to an exchange.
Yeah, very true. And I mean, Rob, are we asking the wrong question? Because I guess so many of these so many big sales of crypto, if you're going to sell 10K BTC, it's probably more likely than not going to take place over the counter, and so not impact the market at all, I guess. Is that fair to say?
Yeah, I mean, we'll look at how well MicroStrategy hit all their buys in those initial time frames. They just used Coinbase. They did an OTC. Didn't move it too much. So, I mean, these institutions, they're not dumb. They want to get at the lowest price possible, get in there, soak it all up, and then do what they do to retail investors. But to me, like honestly, I'm kind of hoping for dips because I always have this feeling like I didn't buy enough of X, Y, Z. So like for me, I'm just looking at it like, well, if it goes down, not a bad day for me. And then unfortunately, if I'm wrong and it goes up, well, geez, that's awful too. So like to me, I just look at it like, that's it. Either way is fine. Institutions are going to do their thing. And I don't think we're going to see much price action unless for two things: Bitcoin ETF comes off, or we go into a recession and things just start sliding down. Either way, we'll see. We'll let it all play out. The big blow off tops isn't going to happen until 2024, if you believe in Bob Lucas, what he talks about potentially, or 2025. So just waiting for that time. I got time.
Yeah, time is on our side. I must say, I always love to think about whenever you see these kind of old wallets waking up, ICO wallets from 2015 or Bitcoin wallets with, an unfathomable amount of BTC in them, and they've been dormant for, 10, 12 years. Suddenly they wake up. I love to think what the story behind that is. Has someone all of a sudden had a flash of inspiration and gone, that was my private key. I've been trying to think all along, or they're clearing out an old drawer and they suddenly find that they've actually got the keys to this sort of digital fortune that they'd kind of given up on. It's always interesting to speculate on. Okay, let's move on to the final question I wanted to talk about, or the final thing I wanted to talk about before we take some audience questions. And just a reminder to everyone watching, if you do have questions for Rob, Ben, and myself, please do put them in the comments, and we will pull out a few towards the end of the stream. Now, so for the last thing we want to discuss, so I recently, let me just share my screen with you guys. I recently read a very interesting bull market investment thesis from this chap here, the DeFi Edge. I don't know if you guys are familiar with DeFi Edge. It's I came across him on Twitter. He's got a very good newsletter. And I think he does. I think he has sort of a number of kind of educational resources available. I think he's great, and I really enjoy reading what he puts out. But one of the things in his recent newsletter, if I can just find it, was his case for a bull market investment strategy. And the upshot of it is, quote, lower your IQ in the bull market. Are you here to be right, or are you here to be profitable? And the basic thinking behind this is that a load of people, maybe people who've been in crypto for a long time, or people who really are really into it, They'll spend ages digging through, finding these projects with amazing fundamentals, with amazing teams behind them, all the right things supposedly to put them in place to pump. And actually, this argument says that really in a bull market, what you need to be doing in order to make money, which is, let's face it, what we're all there to do in a bull market, you really need to identify what projects the kind of new money, the new people into the market are going to chase after, and get in on them. So do you guys feel that that is perhaps the way to go in a bull market? Just stop, don't think about it so much, just try and find what everyone else is going to go in for and get in there early. Rob, what are your thoughts on that?
No. Well, no and yes, and I'm going to tell you why. Because like if you out there, like first of all, when you watching this video right now, you are not a noob. You've been here for quite some time. If you're here in this market right now in the long prolonged era, you've been through most of it. You're probably a class of 2021 or 2017, one of those two. So you know that if you're just going to go lock, stock, and barrel and follow the herd, there may be some gains to have, but I've been talking about this on my channel for the last 3 or 4 days. Like once you hear about these pumps and where things are going, it's kind of like too late. And then you just become exit liquidity. So if you're talking about that part, no, I don't believe that you should follow the herd and then go in that way. On the other side, like just kind of to dumb it down, look, I mean, you can't get any simpler than DCAing and just kind of holding on and those type of things. But this is the problem with DCAing is that you see your portfolio, this happened to me, go down. I mean, Ben talks about all the time, bleeding against Bitcoin. I've on some of these projects, Cardano being one of them, if you hold Solana, you're down like 90, 95% from like all-time highs. And that's just how it is. So if you're dumb and brave like myself, then you can do these things. And sometimes it works out. But again, a lot of these projects, and we talk about this, are not coming back. That's why sometimes, and I hate to say it, but sometimes this works for VCs, a spray and pray methodology, if you want to do that, sometimes works pretty well and off you go. But I still think it's important that you want to do as much research as you possibly can to get into the right area or the right project instead of just leaving up the chance going, Pepe coin looks awesome. We'll go there. Sell the house, honey. So I just think that you can do some research, but don't go crazy.
Good advice. Good advice. Ben, I find it impossible to imagine you being able to just to not dive into it, to not to kind of disengage your brain when looking for alts to buy. Am I doing you a disservice there? Could you think you could do that, or are you always going to be sort of a fundamentals man as well?
I mean, last cycle, that's basically what I did. So last cycle, I just started buying alts in Q3 of 2018, and I got wrecked for like next year. So yeah, I mean, I think that if you had asked me this last cycle, I had started buying alts to the equivalent of the summer of 22, right? Because I had started buying them in the summer of 2018. Because I thought the summer of 2018 was the bottom. And that's why in the summer of 2022, I was like, hey guys, it's probably not the bottom, because normally we dump in these bear market years at least one more time. And last cycle, we had a higher low out in March of 2020. The cycle before that, we had a double bottom in August of the pre-halving year. I mean, I didn't have time either. I mean, like I think a lot of people just, they don't, they have full-time jobs. They can't focus on everything. And so sometimes it is better to just have, you just pick out stuff you think is going to be around for a long period of time, and you can DCA that no matter what, right? I mean, I think if you're starting out in crypto, it's best to start with Bitcoin and then to sort of branch out from there. If you just go all in and you just DCA only a very single, 2 or 3 altcoins, you run the risk of putting your money into crypto at a potentially good time, only to 2 years later, when people congratulate you, to just kind of know that you're the person that, while you were bullish on crypto, you put them in the wrong cryptocurrencies. And, maybe Bitcoin went to new highs, maybe Ethereum went to new highs, but the altcoins that you picked out didn't go to new highs. And that's not a fun spot to be in either, right? So that's why normally it's good to have it's good to start off with the blue chips, and then let the altcoins come later. I mean, one strategy that I think is underappreciated, but I think it honestly it is one of the best strategies is Bitcoin, and this is what I've done for the last 18 months, right? Like Bitcoin heavy until Bitcoin hits new highs. Now I'm not going to do that specifically. Like I probably would get alts before Bitcoin hits new highs. But I will say this: if you look at a lot of altcoins, they bleed on their Bitcoin pairs even when Bitcoin's going up to new highs. Last cycle when Bitcoin hit new highs, Ethereum was still 50% of its all-time high. Okay, and I mean a lot of cryptocurrencies were so far below their all-time highs. Now, if you only look at them on their USD pairs, you might get depressed if you wait. But if you look at them on their Bitcoin pairs, you know, and I put out a tweet not too long ago, and it just to help people visualize this, and I don't know if I can find it, but it was something to the tune of like, you know, in a year ago, basically, like if you had converted your one Bitcoin to altcoins a year ago, you know, you would have been able to get maybe like 16,000 ADA. Like, so if one Bitcoin about a year ago or so was worth 16,000 ADA. Today, it's worth over 100,000 ADA, right? Like one Bitcoin over a year ago would have been worth like a few thousand SOL. Now or a few hundred, right? Now it's worth a few thousand or something like that. And the list goes on and on. I mean, you can look at so many altcoins and see that if you had just focused on the Bitcoin dominance, I snuck it in, right? If you had just focused on a Bitcoin centric crypto portfolio, you could use that Bitcoin now and go out and buy those altcoins and get so many more of those altcoins for your Bitcoin than you could have gotten a year and a half ago. So yeah, I think that a lot of people look. I've been very successful in crypto by just DCAing what I thought was a good project and then tuning out until things went parabolic. Not everything went parabolic, right? I certainly picked out some duds that didn't do anything, but if you pick out a few, right? If you get Bitcoin and ETH, and then you pick out, you know, 2 or 3 other things, and then just make it automatic, like what Rob does, where he just does it like on a very frequent basis. I mean, it doesn't have to be every day. It could be every week. It could be every month. Just some version of that. Then you probably will be successful in the future. In 2018, I tuned out of the market for the most part for the second half of the year. I just kind of saw some stuff, I bought it, and I just tuned out and I waited, and eventually I was rewarded. But guess what? A lot of those alts, they put in new lows as early or as late as like 3 months before the halving, right? So that was why this cycle I'm like, all right, I'm gonna come out here and tell people to just focus on Bitcoin, the Bitcoin dominance until it reaches a certain level, and then the altcoin market makes more sense. Next cycle, I don't know if I'm going to do that because you know, even if it's right, it's not viewed very fondly. That was my goal.
Yeah.
It's a pretty good goal.
Sorry, Rob, go on.
No, I'm sorry. No, go ahead. You got it.
No, I was just going to say, I think it's the more I've kind of thought about this idea of, you know, kind of disengaging your brain, disengaging your IQ, and I think there is perhaps a happy medium, as you correctly point out, Rob. If you're watching, people watching this live stream are most likely kind of grizzled veterans of the crypto space. They've been through a lot. And I think probably, you know, the idea of disengaging your brain and just kind of chasing the pump along with all the new money is kind of anathema to them. But I wonder if there's a happy medium to do it. Like, is there a way to kind of take all your experience in this industry, you know, everything that you kind of learned over the last few years, and when you're looking at altcoins, to go, right, okay, let's leave fundamentals aside. Let's leave what I think is a great project with great potential, yada, yada, yada. Maybe what I should be trying to do is to put myself in the mind of a new investor, someone who doesn't really know what they're doing. What sort of projects are going to appeal to that sort of person, and what are they going to be looking for, and then you get things like, not only, I mean, I think people do pay attention to use cases. I think people, many even newer investors do want to understand what it is they're investing in. Plenty will just throw money at anything, sure, but I think there's still a decent proportion who want to understand it. But I think things like, for instance, sticker price, the price point at which you get in, like this is something that the DeFi Edge makes, a point he puts really well. I think there's still that thing. People would much rather own 10,000 of something, 100,000 of something priced at, a fraction of a cent, say, or own a trillion SHIB, rather than hold like a small portion of a quality project. Obviously, Bitcoin being the obvious example, and you hear this from people newsreaders all the time. Oh, well, Bitcoin's so expensive, and then you have to explain to them, no, it's not expensive. It costs more than it did, sure, but there's still this amazing potential in it. But of course, they're chasing 1,000x gains on something they can get a huge amount of, because they kind of think or imagine that it's going to do the same thing that Bitcoin might have done. So I wonder if there's a way that you can use your experience to put yourself in the mind of someone like that, and kind of and identify the projects that perhaps they're going to go for, and get in early that way. What do you guys think, Rob?
Yeah. So like, I mean, you can this is the thing, like you can use your experience, like Ben talks about. Like I use my experience to realize that, when you hear about these great stories about these new projects, and this is going to be the best thing ever, you got to really look at it and go, is that true? Because I've been down this road before, and I bought these crappy projects and they didn't do squat. So now take a look, like I always take a look at it, like what's the cut as I talk about new projects. How big is the community? How is it growing? If it's not growing, what's the utilities? Is it a Me Too type of thing? What is the team? What have they done before? What are they doing right now? And of course, the tokenomics, who's dumping on me or who's saving or whatnot. If you take a look at those, as far as like a new project, you can kind of, go forward. But me personally, these days, like when you get into this for so long, you just start to go, okay, well, Bitcoin is the least volatile and the safest out of the most volatile asset projects that we have. So I'm going to go into that heavy. For me personally, it's 75% of that. Then I'm going to go into Ethereum, because everything's built on that. That's 10 to 15%. And that doesn't leave me too much for these alts, but I'll get into them, because as time is going on, I just learned, like, it's not about how much you make, it's how much you keep. And in that situation, you don't want to go, you know what, YOLO Pepe, and here we go. So yeah, you can use your experience as time goes on.
Yeah, very true. Very true. And let's face, we shouldn't. I shouldn't come across as so cynical, really, should I? Because let's face it, there are great projects out there that will do really well, that will pull 100x's. That it is possible to have everything in place, for a project to have an attractive sticker price, and good fundamentals, and a good team, and a good use case. So, yeah, I think perhaps. We shouldn't be too cynical in looking at it like that, but I still think I do think there's a lot of sense to that theory. Certain people will be chasing certain things, and if you can get ahead of them in that respect, then you could make some money. But I don't think that should certainly not be a full substitute for putting together a portfolio of what you believe to be quality projects. And obviously, as both of you guys have said, having a good allocation to BTC and ETH as well, I think is vital.
So last cycle I just did Bitcoin, ETH, the blue chips, right? And then I did Cardano, because I'm like, well, in the bull market, the gas fees for ETH are going to skyrocket, and there's going to be some narratives about what's the competitor to it. And then I did Chainlink, because I saw that Link Bitcoin was putting in higher lows. So that I think is actually something that everyone could take from this is while a lot of altcoins have bled against Bitcoin, they don't all. So if there is an alt that you really like or you're really interested in, check its Bitcoin pair. And if it's just putting in higher lows against Bitcoin, like that is at least a good sign, right? Like that's a good sign for the future. It doesn't mean that it's going to go up on its USD pair tomorrow, or, but it's generally a good sign in the future for the future. That was one of the reasons I was interested in Chainlink back in 2018 and 2019. So I was like, wow, it's been putting in higher lows on its Bitcoin pair. So, what's going to happen in the halving year? It's probably going to do quite well, and it did. So if you have an altcoin that you see is putting in higher lows on their Bitcoin pairs, that's probably a good thing. By the way, there's another way to phrase what you said, Guy, at least from that website, is that I'd rather be rich than right, right? I mean, I think we're all going to be wrong. Exactly. I mean, I feel like I get things wrong constantly, but I'd rather, if you have some, right? I mean, if you DCA into the stock market, which is what I generally do, I just get low expense ratio index funds. If you have a Bitcoin position and you just, you're just waiting around, just see kind of what happens. And as Rob said, right, if it goes down, great, you have money to buy it. Like that's the way to navigate the market. But yeah, I think saying, just thinking of it like that, like you'd rather be rich than right at the end of the day. What's more important, right? I mean, you want to be right about something, or you actually want to make money on it.
Yeah, all very well sitting there with no money going, well, I was right. Yeah, no one will be.
I was right about the Bitcoin dominance.
Yeah, exactly. I tell you right now, there's somebody on crypto Twitter right now going, I was right. I told you guys. Didn't invest, didn't do anything, just wants to be right. Great. Be right. I'll have a good time in Puerto Rico.
There we are, folks. Great alpha from the assembled team there. Okay, I think we've just got, what have we got? About kind of 9-10 minutes left. So I thought we'd get some questions, get some feedback from our loyal viewers. The first, we've got a good question here, Ben. This one's for you. From Orlando, are you currently buying BTC considering where it is in the risk metric? I know you normally set your buy point below the 4 risk metric, so wondering if you loosened up on that.
No, I mean, so what I do is I just I buy it according to the risk metric that I've used a few. I mean, I think some people on here have at least seen it, but the general idea is, let me share my screen so people can actually see it. Yeah, so I mean, the idea basically is you just buy it when it's below a certain risk level and sell it when it's above a certain risk level. So for me, I just buy it when it's below 0.4 risk and sell it. I don't sell it between, at these, between like 0.4 to 0.6. So like, the idea, right, is just to blindly DCA in the blue regions and then to blindly sell in the red regions, So like I had a lot of limit orders filled over here on Bitcoin, not as much as I would have liked, honestly. Like I would prefer to have had more. But what's interesting is that, in a lot of these cycles, you do tend to revisit that blue region. I mean, like over here in 2020, we revisited it. In 2015, you can see we really came back down here as late as Q4 of 2015 as well. So yeah, I mean, that's all I do, and I just stick to the risk levels, and the current risk on it right now is 0.528. By the way, there's another one that takes into account a lot more stuff. It also takes into account the social risk, but guys' constant videos on Twitter are gonna screw up the social risk. Really. This is another interesting one to look at that takes into account like price metrics, on-chain metrics, and social metrics, right? So this is an interesting cycle because the reason why this didn't go all the way down to 0 is because the social risk was still elevated. And now the social risk has gone down, but the price has gone up. So if the price were to, if Bitcoin were to put in, let's say, like a higher low or a double bottom, then I imagine this would be, at that lowest risk level. But I mean, the whole idea is, you pick a risk level, you DCA below it, whether it's 0.3, 0.4, or whatever, and then you sell when it's above it.
Ben, real quick, tell people what the social risk is, just to put it in, because some people hear about it, they're like, ah.
Well, yeah, I mean, like, so like one example is to look at like YouTube views and kind of see what's going on here, and just to sort of get an idea of are people more interested in crypto or less interested in crypto. And like these are like YouTube views. And I mean, again, like here is me. This is what the path to irrelevance looks like. And then you have Guy over here who's killing it.
Oh my God.
And yeah, getting 200,000 views basically every single, I mean, constantly.
Constantly. This
Yeah,
guy.
but this is I should frame this the path to irrelevance, right? But yeah, and so if you add all those together, right? So if you look at YouTube, if you look at Twitter, and you look at all these sort of things, right, and you normalize all of them, you get a social risk metric, and it's the orange line. It looks like this, and it's just been going down. Like, I mean, to me, what that signals is that people are, even though we're so far into the cycle, right? Even though like we're pretty far in, people are still losing interest, and numbers are still going down. Now, I don't know if Guy is seeing numbers go down because again, he's killing it. But I know for me, and I'm guessing for Rob, I don't know. Have you seen the numbers go down? Is it harder to retain people? Is it harder to get new subscribers?
My numbers are down from last month because I took 2 weeks off. But this week has been, I mean, the last couple of weeks have been actually pretty good. I mean, people seem to respond. I'm not losing subscribers and getting subscribers. So not too bad, but not like April 2021 numbers.
Yeah. No, it is slow. We've noticed it slow down a lot. And look, we may be getting some good views, but at least you guys still have your dignity.
After that video today.
After that, so I should actually take a moment now on the stream, just but shortly before we wrap it up, to just issue a sort of across the board apology to anyone and everyone who saw that video on Twitter that I did. Basically, for those of you, I did a kind of NPC Twitter stream girl thing in order to try and drum up support for the live stream. I don't know how well it's worked, but I think probably lost a fair number of subscribers on that, and I think for some people that may in fact be the bottom. So for anyone who saw that, I would like to apologize. I'd love to say it won't happen again, but it might. So just be aware of that. This is what happens in a bear market.
Guy, if the market crashes tomorrow, people are going to say, all right, that marked the top.
That was the top. And Guy, you will be the biggest meme forever. This was it. Guy in a wig.
I could live with that. Okay, we've got a couple more minutes, so let's get another question. Dejan is asking, can you guys give your opinion on which industry will be most wanted in the next bull run? I guess which kind of sector of crypto, Web3, blockchain, etc. DeFi, interoperability, gaming, storage, etc. Rob, what sectors have you got your eye on in that respect? Anything that you've been kind of noticing recently?
Well, DeFi is good. L2s will be. Watch out for L2s because we just saw like how I forgot the L1 that switched over to an L2 for Ethereum. It's going to be so crowded. You're going to start to see L2s collapse. So that's one thing. And the big thing that we're focusing on is gaming. So we're coming out with our own project, Flappy Bird. It's going to go from Web 2 to Web 3. And I will tell you, like, I've always had this thesis. This is from Statista. There's 8 billion people in the world. Out of those 8 billion people, 3.2 billion are gamers. Out of those 3.2 billion gamers, 63% are hyper-casual gamers, which is roughly equates to 1.8 billion people. Does that mean they're all going to go? No. I will tell you this. From all the people we talked to, because we get to talk to VCs, which is not fun, but it is what it is, they're all say the same thing. They're like, well, we want to invest, but the other crap projects that we've invested into never materialized the game. And I think that's what gamers are looking at. And then there's that. And then, of course, America hates NFTs and gaming. They just hate the Web3 aspect. But inversely, his name's Yatsu or Yatsui. I always get his name wrong. He's the founder of Animoca Brands. And he's going to be on the channel on Monday. He's like, well, in the Asian markets, it's the exact reverse. They love NFTs. They love the Web3 aspect, but America hates it. So this is the thing. Like, I see gaming will be good and big. It just depends on who's going to adopt it. And I will tell you this, for our project, we're not launching in America. And that's because of Gary.
You got Gary to blame. Did you guys, just speaking to that idea of Americans hating NFTs, did you guys, I don't know if you've ever seen Robin Schmidt's videos when he was still on the Defiant. They did an amazing kind of two-parter. I think it was called Why Gamers Hate NFTs. Mm-hmm. Like, honestly, I think that's some of the best kind of content in this space that I've seen. Like, not only production values, but also just in terms of what they were, it was just so fascinating to watch. But it was like a lot of predominantly American gamers just kind of sitting there and just really letting rip on NFTs. I won't try and directly quote it because a lot of it was there was a lot of swearing involved. But I thought that was fascinating. So anyone interested in the GameFi sector that like Rob was just talking about, do check out those videos on the Defiant. You've got to scroll back a little bit. It was back when Robin Schmidt was still there, but really, really worth checking out. Ben, just quickly before we go, are there any particular sectors that you're looking at it at the next bull run, or are you just kind of keeping your powder dry, so to speak?
I mean, for me, it's still mostly Bitcoin is where the interest lies. I think layer ones, I think will probably do well. As I mean, in like other layer, I mean, you have Ethereum, you have Cardano, Solana has popped off recently. Although as measured from its high, it's still basically down about the same as Cardano has, more like mean reversion, if anything. So I think the layer one scene will probably do well. I mean, I'm guessing gaming will do well. I think last cycle gaming was a little bit too early for crypto because to me it felt like it was almost forced. Like crypto bros were creating games, but we need we need people from the gaming sector to just include crypto into their stuff, into the gaming scene. So I think that is probably gonna be pretty big. And yeah, I mean, like I saw a chart recently that showed like the average hours like 20-year-olds were spending playing games over the years, and it's just been going up and up and up. So I'd say that's a sector to be fairly bullish on.
Yeah. I always feel whenever you see numbers for gaming, I remember this was a few years ago now, but when I first realized that actually gaming, like, it made so much more than movies or TV or anything like that. The numbers are just staggering. So yeah, I think that makes it. I think that's definitely a sector to watch. Storage is one that I find really fascinating as well. I think that is something that's got the potential to grow. I think that could grow alongside things like GameFi. As we keep producing more and more data, there's going to be more calls to store it. And I think there's so many decentralized servers like AWS and what have you are just so problematic in so many ways. I saw them being kind of used as a geopolitical sort of pawn the other day. I think this is something that the US is threatening China with. It's like, if you don't keep exporting rare earth metals, we won't let you use AWS to store whatever it is you're wanting to store there. So I think that's a potential narrative as well. This idea of decentralized storage, to do something, find a safe place for all, safe and immutable place for all the vast amounts of data we're going to keep producing. So that's my 2 cents, and that brings us fairly neatly. I think we're just past the top of the hour, so I think we'll call it a day there, gentlemen. Thank you very much, Rob, and thank you, Ben, for joining me this week. I think that was a great chat. Really enjoyed that. Thank you, everyone, for watching and for joining. Once again, apologies if you saw the promotional video for this live stream. Where are we next week? Whose channel are we on next week?
Ben's, I believe.
Yeah, my channel next week.
Okay. Well, looking forward to it. We'll be back at the same time then. Thank you, everyone, for watching. Thank you, Rob and Ben, for joining. See you all again soon.
Thank you, everybody.
See ya.
Okay.